Hello traders, you're welcome to this video. In this video, we are going to be looking at a simple yet powerful trading strategy for the AUD USD currency pair. So if you are a fan of the Australian dollar against the US dollar trading pair, then you might want to stick around as we look at uh, an important strategy that can be used to catch good moves on this currency pair. Okay, basically this strategy combines price action with key support and resistance levels, making it easy to follow and effective for trading AUD USD. We're just going to walk through each step from identifying setups to managing risks and fine tune the approach so you can apply it confidently. Okay, now first of all, the best time frames to trade AUD USD is what we are going to be starting with. We're going to look at um, the best times to trade the currency pair. Now, the AUD USD pair is most active during these overlapping sessions. The overlapping sessions are the Sydney and Tokyo sessions. Yeah, the Sydney and Tokyo sessions, which is midnight to 7 a.m. GMT. Okay, it's good for range trading with low volatility. And then secondly, the London and New York session overlap, which is 12 p.m. to 4 p.m. GMT. This is when most liquidity enters the market, making it ideal for catching strong moves. So to maximize your opportunities, focus on trading during these times, especially during the London and New York overlap, where you are more likely to see larger price movements. Now, how do you spot potential setups? The core of this strategy involves price action and key levels. So now if you want to spot potential setups, you have to identify key support and resistance levels on higher time frames like the 1 hour, 4 hours, daily time frame. Okay, so let's just go to the daily time frame because the higher the time frame, the stronger your levels. Okay, so let us identify support and resistance levels on the daily time frame. We can see a point of rejection here. We can see a point of rejection here. We can see points of rejections around here, right? So we have some zones around these points, right? You can see rejections, right? You can see we have something here. I'm just gonna add here too. Okay, although I can consider this to be on the same zone with this, so let's just put it at the midpoint and remove this instead. Okay, all right. We have another support level here, support zone. Okay, now basically it goes on and on. After identifying the support and resistance levels, you can as well move to smaller time frames, but that is when it is time for you to enter your trades. If you want to get precise entries, you can go down to the 15 minutes or even the 5 minutes time frame if you want to get precise entries. For example, you want to get um, entries at almost the perfect time, if at all there's something called a perfect time in trading. But there are sniper entries. There are sniper entries. Okay, so maybe you were looking for a sniper entry where you catch the price move almost immediately it begins. Yeah, you can decide to look at smaller time frames, to enter the trade immediately after you notice a significant movement. Okay, all right, and then it's important for you to wait for price action confirmation at this support and resistance levels. Okay, so if you find candlestick patterns like the bullish or bearish engulfing candles around support and resistance zones there, those are going to be good spots to enter your trade. For example, we can see a bullish candlestick pattern around here. This is a support level. See, there are rejections around here. So having this form around this zone, yeah, it shows that there is a bullish momentum, and we would have entered a buy. And then this next candle even broke out of the resistance, so we would have still stayed in the buy. And we had a retest and we had a continuation, would have still stayed in the buy. And then we had price rally up to this point, and we saw sellers, we saw the bears push the price to here. Would have considered exiting somewhere around here, since we saw that this resistance was proven to be strong. Okay, now once you observe a candlestick pattern, you can use that as your a signal to enter your trade or exit your trade. As in this case we entered, as in this case we exited. Okay, now we can also look for other candlestick patterns. Basically any candlestick pattern that can signify reversal, it can add to your confirmation. Okay, all right. Now when you enter your trade based on the support and resistance levels, say you enter a buy a buy position after a price bounced off a support level, you can use the next resistance level as your take profit, or you can just watch the markets to know if the resistance will be broken, like what happened in this case. And then you just want to watch out for any possible bearish candlestick pattern that might show up on the chart around the resistance zone, and then you can use that as an exit point for your buy trade. And then in the case of a sell trade, when you find a sell a candlestick pattern or a bearish candlestick pattern form around a resistance, you can use that as a sell entry, and then you can exit at the nearest support level, or you can just watch out for any possible bullish reversal candlestick pattern. If you don't find any the nearest resistance, then you can just wait for the price to get to the next support. I mean, for a sell, if you don't find any bullish reversal candlestick pattern at the first support, you can decide to wait for the price to get to the next support. And we can see that as it got to this point, we can see this bullish candle form. So in this case, we probably would have exited our sell somewhere around here. Okay, and we would have caught somewhere around let's say 167 pips. Okay, so that's going to be a good catch. All right, now in terms of risk management, it's very important that you manage your risks properly. Okay, do not risk more than you can afford to lose, and you can streamline your risks, okay, so that you don't risk more than 1 to 3% of your account per trade. This way, even if you lose several trades, your account balance still remains protected. Okay, and now in the case of stop loss, I skipped that. When you enter a sell trade, of course, you want to set your stop loss below the sorry, for a sell above the nearest resistance level. Okay, for a sell, you want to set your stop loss above the nearest resistance level, above the swing high. And then for a buy, for example, this case, just below the nearest support level, below the swing low. Okay, those are good spots to set your stop loss. And then back to risk management, it's important that you adjust your position size. Okay, always calculate the number of lots based on how much you are willing to risk. For example, if you are risking 2% of a $1,000 account, your maximum loss per trade should be $20. That is 2% of $1,000. Okay, and you want to also avoid over trading. Only trade when a clear setup appears at a key level. Okay, when you find an important candlestick pattern form around a support or a resistance level, that can be a clear sign for you to enter a trade. Okay, you may want to avoid uncertain price movements. Okay, just try and focus on high probability trades. All right, and then you can also use additional indicators to fine-tune your strategy. You can consider adding moving averages just for extra confirmation, and you can also decide to add some momentum indicators, maybe like the MACD or the RSI or the stochastic oscillators, just for additional confirmation. All right, and then you can also decide to diversify with multiple time frames. You can check setups on higher time frames like the 4 hours and the daily, and then confirm on lower time frames. You like when you want to get to precise entries. When you want to get precise entries, you can decide to go to smaller time frames like the 15 minutes, the 5 minutes. That can help you improve your timing for entries. And then it's important that you keep a trading journal to review your performance and tweak your strategy as needed. Okay, now that's very important. And also take the time to practice this strategy on a demo account before trading live. Now, this strategy is basically based on support and resistance. It's a support and resistance based strategy, right? It's based purely on price action. And then you can also use indicators just for additional confirmation, okay? But this strategy is based on price action, support and resistance levels, candlestick patterns, and that's just it. And it's important that you focus on spotting clean setups and following risk management rules. And over time, your confidence and your confidence and consistency will grow. Okay, so I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos. Thanks for watching. Happy trading.